This indicator is awesome. It gives you impulse signal where the momentum is suddenly increasing and a breakout is probably going to happen. This is one of the best indicators on TradingView for scalping strategies and day trading strategies, so it's suitable for time frames like 1 minute, 5 minutes, 15 minutes, up to 1 hour. This indicator can be used for any type of trading strategies, whether it is trend following strategy, reversal strategy, or breakout trading strategy, because it gives you a signal when there is a sudden increase of momentum in the market. I will completely explain this indicator and how you can use it in trading, so make sure you watch this video until the end and let's get started. Before I add the indicator, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, on TradingView platform, here we click on indicators and we search BB Impulse Indicator, this one, which is written by Lazy Bear. Alright, this is the indicator, and as you can see, it is added here below the chart. As you can see, we have a histogram and the bars are sometimes above the center line and sometimes below the center line with different colors. As you can see, this indicator is built based on Bollinger Bands and it is created by John Bollinger, who's the one created the Bollinger Bands. If we go to the settings of the indicator, you can see that we have settings for length and multiplier similar to Bollinger Bands, and similarly by default the length is set at 20 and the multiplier is set at 2. We don't change this because this is optimized for most of trading strategies, but here we have another two settings which are alert level, which is set at 0.24, and impulse level, which is set at 0.4. Before I close the settings, here we go to the style tab and here we change the histogram to columns so the bars will be better visible on the price chart. Alright, so this dashed line here is alert level, which is set at 0.24, and this solid line here is impulse level, which is set at 0.4. So depending on the size of the bar, if the bar passes the alert level or impulse level, we can have a signal about increase of momentum. When the bar passes the alert level, the dashed line, it is alert signal that the momentum is probably going to increase, and when the bar passes the impulse level, the solid line here, it is impulse signal and it tells us that we had a sudden increase of momentum in the market. But not any impulse signal means that the price is gonna further move in that direction. For example, for this impulse signal that we had here, which is a downside signal, you can see that the price didn't go down considerably, but for this impulse signal that we had here, which is an upside signal, the price advanced after that considerably. So the context of the signal is important. All that the impulse signal is telling us is that we had a sudden increase of momentum, but deciding on if the context confirms further movement of the price after that needs more analysis, which I explain it now. But before that, I'm proud to announce that I have published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to the indicator. So as I said, when we have impulse signal, it only tells us that in that time period we had considerable increase of momentum, but it doesn't mean that definitely after that the price is gonna further move in that direction, like this case here, which is not worth of trading. But this one here, for this signal, it was definitely worth of trading because you can see that the price advanced after that considerably. Two of the main situations where you may get a false signal like this is when a reversal is happening in the market, like this case here, and another one is when a pullback happens in the market, especially deeper pullbacks. First, let me explain reversal situation and then I will explain pullback situation. In times that a reversal is happening in the market, it is very common to have exhaustion move, which is a sudden increase of momentum alongside with sharp advancing or decline of the price, and usually with high amount of volume. During this downtrend, when we identified that the current trend is down, when we got a bearish signal like this, the first thing that comes to mind is that this was a pullback and the pullback ended now and the price is going to decline more, like these bearish signals here. So you must have a reversal identification in your system even when you're using a trend following strategy, so you can avoid false signals like this where a reversal is happening in the market. One good measure for probability of a reversal is divergence. Let's add RSI to our chart. This one, relative strength index, and see if RSI is showing any divergence or not. You can see that following this downtrend where the price was making lower highs and lower lows, here when the price made lower low, you can see that RSI made higher low. This is a bullish divergence and it tells us that probably a reversal is going to happen. So at this point, when we got this bearish signal, we don't enter a trade because there is a probability of reversal in the market. Even in terms of price action, where the price is in this range, you can see that when this signal happened, the price couldn't break the previous low, and here tight consolidation. Just see how many candles inside the body of this candle. After that, a downside gap, but not any considerable momentum as you can see. So here we could easily avoid this false signal. But here for this bullish signal that we have here, this is happening following a bullish divergence, and it tells us that now we have a sudden increase of momentum, increase of upside momentum, but we need more confirmation. We can use price action concept for further confirmation. For a bullish divergence, we mark the high of the pattern and we wait to see if the price can break above this high or not, because if this high is broken, which is the last lower high following this downtrend, it tells us that the structure of the downtrend is already broken. So even higher probability now to have a reversal and starting of an uptrend. Here you can see that this candle is closed above this high level, so the reversal here is confirmed, and in practice we could enter a long position at this point, and you can see how the price turned to an uptrend after that, making this position very profitable. Alright, so now you learned how you can avoid false signals that are happening during reversal situation of the market. But as I said, we can also have these kinds of impulse signals during pullbacks. And now let me teach you how you can avoid them and instead take high probability signals inside a trend. First, let me close RSI and then we add another indicator. Here we click on indicators and we search MACD. This one, moving average convergence divergence, and we need to change its settings. So here we go to the settings of MACD, and first here in the inputs tab, for the fast length we set it at 100, for the slow length we set it at 200, and here for signal length we set it at 50, and then we go to the style tab and we remove MACD line and signal line because we only need the histogram for identifying trends of the market, so we can further validate the signals to be sure that they are happening in the same direction with the current trend of the market. This MACD with the settings that we made will help us with trend identification. When the MACD histogram is above the center line and green, the market is in an uptrend, and when the MACD histogram is below the center line and red, the market is in a downtrend. So when the MACD histogram is above the center line and green, we only focus on bullish signals. We don't take bearish signals because they are against the current trend of the market. So when MACD histogram is green, the focus is on bullish signals. But we don't trade only based on this because, as I said, this shows that we had increased momentum in this time period, but entering a trade depends on the context. At the moment, the trend is up, so the first condition is okay. But what about the price action? You can clearly see that the price is in a tight consolidation period here like this, and although we had sudden increase of momentum here in this candle, but the price couldn't break the previous high, and even after that there is no upside break of the price, and then here the price went down. But we don't pay attention to this breakout or these bearish signals that we have here because they are against the longer term trend of the market. So here we could easily avoid this false signal that we had here. If we entered only based on this, that would be a losing position, but with price action analysis, we didn't enter any long position here at this point. Alright, moving on the chart, here you can see that we had a bullish signal, but what about the price action? You can clearly see that the price is in a tight consolidation period like this, and at this point where we had a sudden increase of momentum in this candle, the price didn't break the high, but later after that, here you can see that the price could successfully close above this level. So the buy signal here is confirmed, and in practice we could enter a long position at this point, and you can see that this was a profitable trade. Here another long position signal happened at this point, and when we check the price action, we can see that the price is in a consolidation period in this period. When we had this increase of momentum, the price didn't break above this range until here where we got a candle that is closed above the high of the range. So in practice we could enter a long position at this point, and this is also a profitable trade as you can see. And we do this similarly when the MACD histogram is below the center line and red. This indicator is a perfect choice for breakout trading strategies, especially breakout during trends that can provide you low risk trading opportunities. But please pay attention that you need to manage your risk properly, because losing positions are always part of the game and you cannot avoid all of your false signals. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategy that you can use. By the help of this risk management, you can minimize the effect of your losing positions and make consistent profit in the long run. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.